Hey guys, it's Stephen with the Bytes chart update. As you've seen, we've had some pretty weak overall crypto market sentiment. We are starting to find a little bit of support right now, but we could definitely keep trending lower here until Monday, Tuesday is where I look for a turnaround. So look for this first support for the monthly pivot of January. I got that at about 3,800. So it looks like we're way there, but overall, I'm not worried. I'm just going to keep accumulating when I can. And yeah, so uh, we are at the central pivot for this week on the Bytes to US dollar chart. We'll see if we bounce, maybe not. I wouldn't mind coming down and testing some support here. I do have this liquidity position still ready with about 60 Ethereum ready to buy this dip. And yeah, my other position is accumulating some fees nicely. We are right in between at the moment, so I am out of range. So it would be nice to possibly see, a little bit of action either way. But I just wanted to point out that, you know, I started off with about a $4,600 position here. And obviously the price of Ethereum was much higher and the price of Bytes was much higher. But this position has afforded me to actually be up $300, even though we're in a bear market. So definitely take that into consideration. You can use these liquidity pools to kind of, it limits your upside, but it also saves you on when the price is going sideways or down as well. So for the volume, yesterday we had about 2.98 million, just fine. I like to see that, and looking like we're going to be down for today. And just to kind of go over exactly what liquidity pools are. So with a regular liquidity pool, you have to put in 50% of each token. You would do half in Bytes, half of Ethereum. They both have to equal each other. And as buy and sell orders come in, let's, for instance, say somebody wanted to buy some Bytes. Those Bytes would be taken out of the pool. In exchange, more Ethereum would be added to the pool. Now that we have more Ethereum and we have less Bytes, that in exchange creates a price for the price of Bytes that's going higher. So it's a simple calculation. The way Uniswap version 2 worked, they did it mathematically so that when you do pool, you're not losing as much as many of your tokens as you would in something like this with version 3. So in version 2, for every 100% move, you would lose about 5.7% of your tokens. So it's really not very effective as far as like what you're losing as far as upside, and that's how you calculate the impermanent loss. So say the price of Bytes did double, you would lose 5.7% of the upside because those tokens are gone. And it's really not that much. But the difference is with a Uniswap version 3, you have the choice to pick your positions, like where you want to provide your liquidity. So as you can see right now, we have a bunch of people providing liquidity right around where the price is. And as the price goes below here, you could actually see bigger swings because there's less money being able to be traded. So you could see some pretty quick dips happen. And I did want to point out a few things with my position. I just calculated. So let me just bring this up here. So for example, I have this 0.029 to 0.03 range. And I had about $4,000 invested, and I'm just going to do this for simple math. It was worth about $1,200 the other day. So for 3 days, I was able to make $1,200. And if you look at the fees that were paid out during that day, you could see that it totaled up to about, if you take these 3 days right here, 30, 29, 29, it came up to be about $84,000 in fees were paid out to the liquidity providers. Now, the way that the Bytes pool works is we get 1% of all of the transaction volume. So if there is $3 million in volume, that would mean we get $30 million in fees distributed to the liquidity providers. Now, it gets tricky because you have to take into account where exactly the liquidity is and like where the concentration is. So obviously, if there's more people providing liquidity in these zones, there's going to be less money for you because there's more people trying to claim that same amount of liquidity. So when we have a total value locked of about 3.4 million, my position was able to, basically the way I calculated it is to be able to get paid out $1,200 on a $3.4 million total value locked here. I basically turned my $4,000 worth of liquidity, and it was basically worth about $47,600 of this pool. So just by concentrating the liquidity, I was able to get basically leverage, and I was able to get more access to the fees that were given out. Just to clarify, if within a regular liquidity pool, if there was $3.3 million locked up, and say I put in, I don't know, $3,000, I would only get 1% of that, of those fees, which would only be like a couple $100, which isn't that much. And that's with a regular liquidity pool. With a Uniswap version 3 liquidity pool with concentration, you're able to get much more of the pie because you're allocating more tokens to where a lot of the action's happening. So hopefully that makes sense. If it doesn't, I can maybe answer some questions in the comments. So let's just keep moving on here. So we got some new holders from yesterday, about 25. Token supply is up a bit, and the market cap is down due to the overall market. Everything's about the same. I think we got a little bit higher floor. We're about 80 last time I checked, and this is up another Ethereum. So the US dollar is down because of the price of Ethereum, but in price in ETH, everything's about the same. So yeah, we'll see what happens. This RSI is this Fisher RSI is coming down pretty low here. So it looks like we have some opportunity, honestly. Like I'm not scared one bit. I'm always going to be stacking and when I can and buying the dip. So I hope everybody is being safe out there and not being too worried. And yeah, I guess that's it, guys. If you have any questions, let me know, and I will catch you next time.